Are you one of the many who are gripping the edge of their seats waiting for Tesla's Q3 earnings report and hoping it will be better than good? At this point, even critics are as eager as fans for this Q3 update. If you've been waiting to know how much money you can make with Tesla stock after the Q3 earnings call, you probably should not miss this one. Tesla is the world's leading electric vehicle manufacturer with an inspiring mission to accelerate the world's transition to sustainable energy. It has been at the forefront of this industry since its inception almost 20 years ago, but it is in the last 5 years that Tesla has truly transformed itself from a challenger into an industry behemoth. On the second day of August, Tesla released a press release that states, "In the third quarter, we produced over 365,000 vehicles and delivered over 343,000 vehicles." This news made waves in the Tesla community. Tesla fans were impressed with the numbers, while the critics, as usual, have been picking on Tesla because of the same numbers. Before we go on, Moomoo developed a new function, the industrial chain. Suppose you want to find out the stocks that have the potential to fluctuate in the upcoming days or months. The industrial chain will help you a lot. It provides a detailed picture of the trending industries, such as semiconductors and EVs. You can quickly find stocks either upstream or downstream, which helps you focus on target segments of an industry more quickly. Also, as segments are related to industries, you could predict price fluctuations faster without reading many research reports to determine the relationships within one industry. Link in description. In the same press release, Tesla's Investor Relations Department stated, "Historically, our delivery volumes have skewed toward the end of the year due to regional batch building of cars. As our production volumes continue to grow, it is becoming increasingly challenging to secure vehicle transportation capacity and at a reasonable cost during these peak logistics weeks. In Q3, we began transitioning to a more even regional mix of vehicle builds each week, which led to an increase in cars in transit at the end of the quarter. These cars have been ordered and will be delivered to customers upon arrival at their destination." The company announced that Tesla's Q3 2022 financial results and Q&A webcast will be on October 19th. The EV company's net income and cash flow results will be announced along with the rest of the financial performance as they announce Q3 earnings. Tesla vehicle deliveries represent only one measure of the company's financial performance and should not be relied on as an indicator of quarterly financial results, which depend on a variety of factors including the cost of sales, foreign exchange movements, and mix of directly leased vehicles, stated in a press release. "Everything that makes a lot of money takes a lot of time," says a Tesla enthusiast after seeing concerned comments about Tesla's Q3 production and delivery numbers. He shared that at first he shared the same sentiment, that Tesla's going down. However, it didn't take him long to see it in a different light. In fact, he believes that Q3 appears to have been a solid quarter. More than that, he shared that he is more bullish than ever. According to him, after Tesla releases third-quarter financial reports, the bears will be all over the place to scare retail investors to panic and sell. Bears will supposedly use the seemingly disappointing delivery numbers to claim that demand for Tesla vehicles is going down. However, he believes that those who did their research about Tesla are well aware that Tesla's value will rise not in the following days or months, but in 5 years' time at least. It may even take 10 to 15 years before Tesla becomes one of the most valuable companies in the world. And because of that, instead of selling shares, as bears may advise after the Q3 earnings call, it will probably be more meaningful to buy more shares, especially since it is once again in the $200 range compared to the $900 price tag several months ago. In fact, more retail investors are waiting for Tesla's stock price to go lower so that they can buy more shares before it soars to the moon. Although it may not go extremely high in the next few years, it definitely will in at least 5 years. The point is not to get rich quick with Tesla. In fact, any get-rich scheme is all shams. It doesn't work, it's all scams, says the Tesla enthusiast. According to him, everything that makes a lot of money takes a lot of time, and that includes investing in Tesla. Tesla bulls believe that the company has no demand problem. In fact, the problem lies in supplying demand, which is why the prices are up. Tesla is at full capacity and is trying to make more gigafactories. That said, although panic may ensue after the Q3 earnings call, it will pay off to take a minute, stay calm, and make logical decisions. Other investors will probably panic as Tesla's stock price is highly probable to go lower shortly after the earnings call as a result of the numbers presented. However, keep in mind that Tesla is a long-term investment, so investors looking for short-term investments will be greatly disappointed. Experts believe that Tesla has great long-term growth potential, but in a market that's well in control of the bears, the volatile stock also has a lot to lose. In fact, Tesla shares closed down more than 8% shortly after the company released third-quarter production and delivery numbers that fell short of analysts' estimates. Tesla reported 343,000 total deliveries and 365,000 vehicles produced during the quarter, which missed analysts' expectations of 364,660 vehicles delivered, according to estimates compiled by FactSet-owned Street Account. Deliveries are the closest approximation of sales reported by Tesla. Total production increased from the previous quarter when the company said it made 258,580 cars. Tesla produced 19,935 of its more expensive Model S and X vehicles and 345,988 of its more popular Model 3 and Y vehicles during Q3, according to its report. Over Q2 2022, average prices for Tesla vehicles rose by about 14% year-over-year, and experts could see an even bigger increase for Q3 as the company continues to prioritize higher variants of its vehicles in a supply-constrained environment. Additionally, Tesla raised prices on its most popular Model Y by about $3,000 in June, with the more premium Model X and S seeing bigger hikes. Moreover, margins could also see a recovery. While Tesla's automotive margins dropped from 32.9% in Q1 to 27.9% in Q2 2022 due to the production headwinds in China and investments in ramping up production at its newest plants in Germany and Texas, experts believe that they could recover once again in Q3, driven by better economies of scale and rising average selling prices, although this could be partly offset by higher material costs. Although Tesla stock has witnessed some headwinds recently, falling by about 16% over the past month, most remain optimistic about the company's prospects and value Tesla stock at about $341 per share, which is almost 40% ahead of the current market price. Despite the weaker-than-anticipated quarterly delivery numbers, Tesla should pick up the slack as it scales up production at its new factories. Contrary to rising concerns, demand does not appear to be an issue for the company, with Tesla CEO Elon Musk indicating that the company is constrained by production and not demand. For perspective, delivery timelines for the Model Y SUV stretch to as long as 6 months. Moreover, Tesla's margins are also among the highest in the auto industry, and this should enable the company to be solidly profitable as sales rise further. At this point, Wall Street analysts were divided over the electric vehicle maker's report, and the sliding stock price suggests investors are worried about the delivery numbers. A Goldman Sachs analyst maintained Tesla's buy rating and said the company will continue to benefit from the long-term shift to electric vehicles, while a JP Morgan analyst kept an underweight rating on Tesla, saying that the earnings miss was in line with the firm's expectations. Cohen's managing director for energy, sustainability, and mobility tech, Jeffrey Osborne, wrote in a note following the Q3 deliveries report, Tesla has ample cash and has undertaken a meaningful global manufacturing expansion with facilities in China, Berlin, and Austin, Texas, with the latter two approaching full ramp. While competition in the EV space continues to heat up, Tesla's focus on electrical efficiency and investment in battery technology likely makes them tough to chase in the short term. Cohen has a market perform rating on shares of Tesla and a price target of $244 per share. Go to Moomoo to see exactly how Tesla stock will perform. Link in bio. Deutsche Bank's research analyst Emmanuel Rosner was more bullish on Tesla overall and wrote in a note that the firm sees potential for Tesla's humanoid robot concept nicknamed Optimus, even though it has only shown a preliminary first-generation version at an AI Day recruiting event on Friday last week. He also noted that Tesla continues to work on its self-driving technology and supercomputer named Dojo for artificial intelligence. He wrote, There remain numerous challenges in the performance of the system that the team is working on, such as lane selection and left turns, but it continues to progress well toward its goals of deploying to the entire North American Tesla fleet by the end of the year. The firm is maintaining its price target of $400 per share and views Tesla as one of the most attractive stories in the autos sector. Subscribe to Tesla to make sure to be updated on the upcoming Q3 financial results.